All right, so today is Wednesday, August 5th. This is the live trading room end of day review. We're taking a look at what our performance was for the day. Let me show the detail here. We have some folks who like to review the detail from 7 o'clock on. You can see that today was really choppy. First of all, if you were with us in the room today, you know that things were choppy. We're very, very tightly wound around the moving averages, really having a struggle breaking out of those moving averages. But we continue to follow the adaptive entry system signals, the trend bias signals, the momentum signals, and the consensus signals. But starting at 7 o'clock, you can see here on trend bias, for example, you know, we have these small losses. We have a bigger loss. That was a maximum loss. We had quite a mixture today, and then right at the end, we got a nice little move. But we recognized early on in the day, and this I think is one of the values of being with us here as a group in our community in the live trading room, we recognized that the movements were a little more shallow, a little more muted than what we're used to on the NASDAQ 100 futures. And so we provided some guidance to say, hey, listen, instead of holding for the usual 10 points, it might be a good idea to lock in 5. So when we started to do that, we were actually gaining a little traction here. And otherwise, many of these trades would have turned into losses. You know, here was a 5-pointer that we locked in. It would have turned into 3.25-point loss. Here was a 5-point that we locked in a momentum trade. This one ended up being -7 points. So it was quite a mixture of performance here. But at the end of the day, it doesn't matter to me as much what happened on today specifically. It matters to me how today fits into the context of my big picture trading business. So if I look down the road 12 months from now and I want to put myself out there and say, let me look back and see how I did. How did I perform in my trading business and what kind of income did I generate? So we try to help with that thought process by tracking 2 particular categories. Now there are a variety of categories that we track: time frames, different configurations of trading all the signals, or just trend bias, or just momentum signals. But we zeroed in on 2 particular categories to then track them in the personal trading plan, which I'm going to go to here in just a moment. But the reason for these categories is because 9:30 to 12, trading all the signals, any trend bias signal, any consensus signal, and any momentum signal, those are all part of the adaptive entry system. Reason for 9:30 to 12 is there are a fair number of people who like to trade, they want to be active traders, but they don't necessarily want to do it all day. And so that's a reasonable time frame for people to trade. The second category that we track is more active from a longer period of time, however, only taking the trend bias trades, because those represent the adaptive entry system's assessment of where the trend is leading us. Are we in a rising trend? Are we in a declining trend? And all of this is based on the NASDAQ 100 futures. This adaptive entry system can be traded on any stock, can be traded on any index, it can be traded on any ETF, you can use options. The basis of the adaptive entry system is such that you can transfer it to anything you prefer to trade. We use the NASDAQ 100 futures to demonstrate what is reasonable and what is possible and how to interpret the signals. All right, so here we go. We're going to jump to our personal trading plan, which is an essential part of any serious trader. We're going to start with our 9:30 to noon category. We only did 7 points today. Well, 7 points on the NASDAQ 100 is, it's $20 a point, so it's $140. So we're going to jump over to our trading plan, and we're going to go to Wednesday, and we're trading 3 contracts because our trading plan has graduated us from 1 contract up to 3 contracts. The account size grows, and we have a limiter in here that says we need $500 per contract of margin for every trade that we place, but we're not going to ever trade and use margin requirement that exceeds 10% of the balance of our account. So we've grown up to 3 contracts, and then we also have a limit, a maximum limit of 3 contracts that we've set in the trading plan. That's a variable that you can adjust, as is the 10% of your account balance. So I'm going to go over here and I'm going to put in 7 points is $140 per contract, 140 times 3 contracts. So it's $420 of profit. And then we had 13 trades. Took us 13 trades to get there, and 3 contracts each. So that's 39 contracts. So that accounts for cost, accounts for expense. So we only made $264 today, but we were positive, okay? And we're not looking at only today. Heck, we had a losing couple of days back here, and we've had some pretty big winning days. And so what we want to do is we want to take each day in the context of what is our to-date average. And we can see that up here. It's 24.63 points. That's what we're averaging. And we're averaging just over $903 a day of profits. So today, the fact that we made $264, maybe that doesn't make us feel very good. Maybe that's not exciting to us as traders. But as I said, the more important part of this is keeping a big picture view. So if I look at this in the context of what we have done for the last 4.5 weeks, now 4.5 weeks is when we actually started profiling the personal trading plan along with the adaptive entry system in our live trading room, we're averaging 24.63 points a day. So the next thing I want to do, and this is extremely important, is I want to take a look at, well, what's my future forecast? I know I'm averaging just over 24 points a day. What am I going to plug in as my forecast for the remainder of a 12-month period? And in this case, I've been using 26, but because of today, my average dropped down below 25. It's 24, just over 24 and a half. So I'm going to actually put it in at 24. I'm going to be conservative. And I also have a number here that I need to evaluate, which says I'm going to plan for the rest of the 12 months that I have on an average 1 losing day a week. Okay, first of all, that's realistic. It helps overcome the emotional attachment to that losing day and feeling bad. You're just planning for it. Okay, you're going to allocate some dollars to that, and you're going to put it in the context of the big picture. So I'm leaving this at 10 because as I can scan back for 4.5 weeks, we've had 1, 2, 3 losing days. We've had 3 losing days in 4.5 weeks, and none of those were actually 10 points. So I think a 10-point allocation going forward to a losing day is a very conservative approach, so I'm going to leave that alone. And now I already explained to you how the 3 contract max comes about. I can change that if I want to. No matter what I change it to, it will always be less than 10% of my total account balance. So I can change that to 4 if I want to. I could change it to 5 if I want to. There we go, 4 if I want to. All that's going to do is to take into account all of my actual performance as well as my forecasted performance for the rest of 12 months. It's going to tell me what a likely income could be for me over a 12-month period. So $353,000 if I traded 4 contracts. If I traded 3 contracts, I can have about a $271,000 potential income. Now that income number is going to continue to change as I accumulate more actual performance days, plug them into my trading plan. But one of the biggest values of the trading plan, in my opinion, is you're having kind of a rough day. It doesn't feel like very good. It doesn't feel like you've done very well today. The market hasn't really cooperated with what you want. And you come to your trading plan, you plug it in and go, oh, all right. So it's not really a big deal. I could still potentially end up with a $271,000 income, having started with $5,000 and just simply using mathematics and the power of the adaptive entry system to drive performance. Now, I don't know what it's going to be like at the end of 12 months. Maybe it'll end up being half that. But once you have 6 months under your belt, once you have a year under your belt, you're going to have a longer time period that is a frame of reference for you personally. And if your average is 20 points a day, then your future forecast should be 20 points a day, because you want it to be realistic based on what you're actually doing. The key here is I consider the 10% allocation towards margin for each contract to be conservative. And so if I'm conservative on that, and I am ultra conservative on my maximum number of contracts, I can actually influence my future income by increasing the number of contracts. Yes, each time I put on a trade, I have slightly greater risk, but remember, if I graduated up to 5 contracts, that means that I have no more still than 10% of my account balance allocated to margin on those futures contracts. So despite the fact that my actual production on each day might be decreasing, I can influence what I want my total income to be by simply adjusting the number of contracts. I'm going to leave it at 3. That's where we've been. We're going to probably stay at a cap, a ceiling of 3, and it gives us about a $271,000 income as of today's performance. All right, so I won't explain that much on the next one, but we're going to look at also the total performance of our trend bias trades trading from 7 to 4. Now here's where we really saw some challenges today. The signals worked, but we just didn't see as much follow through on the signals. And that's when we made the adjustment earlier in the day to say, well, let's take 5 points, because we'd had a couple of trades where we took a full 20-point loss. And so where we ended up today was kind of even. You know, we ended up at 2.5 points positive. Well, that's times 20. So 2.5 times 20 is 50. 2.5 times 20 is 50, and we're trading 3 contracts. It's $150. So we're going to jump back over to our trading plan. We're on our other tab. We just track these 2 categories just to show you how the whole process works. So $150 today, and the total number of trades was 14, 3 contracts each, so 42. So let's just compare that to yesterday. We had a really strong day yesterday, $4,260 trading 3 contracts versus today was $150. And you can see that we have a range of performance. That range is important to focus on, not the individual day. The individual day performance focus is going to drive you crazy, because you're going to feel euphoric one day and you're going to feel depressed the next day. And what I want you to do is to take it all in context of the big picture with a projection out to the future as to what you could actually hope to achieve. The average for 4.5 weeks now is 25.9 points in this category. We have had our future forecast plugged at 27. I'm going to pull that down to 26. I'm just going to round off and say 26. We've been averaging just under 26. And I'm going to leave the 10-point loss allocation per day alone. We've had, we actually lost today when we factored in contracts and the expense of the contracts, but we had 1, 2, 3, we've had 3 losing days in 4.5 weeks, and all 3 of them were significantly under that 10-point allocation. So just as a conservative forecast, I'm going to leave it at 10. And as I said before, I'm going to leave the contract count at 3. You can play around with that all you want. I mean, somebody might want to say, I'm willing to trade a maximum of 10 contracts. That dramatically influences what the future income forecast can be. You might only be comfortable trading 2 contracts, and you can still potentially go from 5,000 to 206,000 over the course of 12 months. Any way you slice it, that is phenomenal outcome if that's the way it turns out. You don't need to decide right now today what it is. You'd like to set a goal for yourself, and you're going to configure each of these components. Everything in blue is something that you enter. That's data that can be variable to your personal plan. But you're going to set them at realistic numbers and build a realistic forecast for yourself. And you're going to see that this isn't pie in the sky going from 5,000 to 200,000 over the course of 12 months. It's just simple math. It's the scaling of the number of contracts, but you're not scaling emotionally. You're scaling based on a certain percentage of your account balance being allocated to margin to open these contracts. And I think it's a relatively small percentage at 10%. Heck, you can make it 5% if you want to. You can make it 20%, whatever you want. I think 10% is conservative. I think a 3 contract max is conservative. Aligning your actual performance to future forecast, that is the right way to be managing your personal trading plan. All right, so let's just real quickly take a look at the averages. So here are the 2 categories. I'll start with the trend bias. We're averaging across all the time data that we've collected, we're averaging just over 38 points a day. All right, so what did we do today? We did 2.5 points. Yesterday we did 71 points. So it's actually right in line. The last 2 days have been right in line with our average. So 38 points a day, and we typically have seen that our win rate is about 73.2%. That's a pretty decent win rate for us right now. The second category that we're tracking is the all signals, taking all 3 signals, momentum, trend bias, and consensus between 9:30 and noon. We're averaging 31.6 points a day. Remember, each point is worth $20 per contract, and we are experiencing about a 77% win rate on those. We have, other categories that have slightly higher win rates but lower production. Takes more time to trade. That's 7 to noon. So there's all sorts of different ways you can slice this. We also have some of our 3 a.m. start time. We're not actually trading at 3 a.m., but we're tracking from 3 a.m. forward for the purpose of developing a trading team down the road, as well as potentially some auto trading. And we're averaging 73% win rate, but from 3 to 4, the average point production is about 136 points. 136 points is pretty strong at $20 a point per contract. So I don't think anybody wants to be an independent trader and be sitting in front of their computer for 13 hours trading. But we have some other reasons, some other potential plans that we have in thought that make us want to track that data. And so we've been tracking it and are pretty excited about what we're seeing right there. So anyway, the averages are right in line with what we've seen so far this week. Today was not as productive as we would like it to be. It certainly wasn't as productive as yesterday, but I want to emphasize this, and I'm going to leave you with this thought. Do not look at your trading as today is all that matters. Look at your trading as, where does today and my performance, my commitment to perform by a set of rules today fit into the big picture of my trading plan? And am I taking action today that will help me get to that bigger income number that I desire, maybe $200,000, $300,000, depending on the number of contracts you trade. So thank you so much, folks, for being here. Thank you for being part of our community. Thanks for being part of the live trading room. And we'll be back again tomorrow.